My name's Asfandyar and this is my colleague Cyril Fan. We run a debt brokerage business called Alternative Debt Solutions, and what we try to do is better connect borrowers with lenders. Our business has been going for about 7 years now, and previous to that we were both working in the financial services industry, in investment banking and private equity.
Investment company approached us focusing on purchase of investment properties. In particular, they were looking at one that were able to offer a number of other properties as collateral. So the implied gearing of that transaction was very low, which so on all metrics appeared very attractive for any credit financier. So logically you would have thought the banks would do this. However, we're finding that banks in this environment are very non-responsive, being very slow, particularly focusing much more on income tests. So notwithstanding the very low gearing level of the transaction.
Yeah, I mean, so we came across Assetline as one of the private lenders in the marketplace that was providing loans. So we sent this scenario to their representatives, and they did a very good job to come back to us quickly and provide a solution. Yeah, no, we were actually introduced to Assetline via another private funding group and recommended their services to us.
So in this scenario, it made sense to approach Assetline directly as opposed to a bank. A bank would have just taken far too long to assess the transaction. Assetline, however, were able to move very quickly because they could take a very strong view on the nature of the collateral involved. In particular, also in situations where there was low gearing involved, Assetline do have the ability to waive a formal valuation report, which also adds to the speed of settlement, which was attractive to the client, notwithstanding the higher cost. As something we all know with non-bank or alternative lenders, typically their cost of finance will be more expensive than the banks. However, the way we were able to sell it to the client in this particular situation was essentially the ability to move very quickly, funding certainty being made available, and I think clients are prepared to contemplate higher cost funding solutions if they can provide certainty of funding and speed.
They might not need the money for 25 years, but they might need something sort of for a short-term period.
Right, there's a definable exit for both the lender but also the borrower, which meant that ultimately the loan was still reasonably cost effective, even though on an annualised rate it might seem more expensive than the banks.
Yeah, so we'll send the loan scenario across to the Assetline team. We find that they respond within 24 hours, more often than not sooner than 24 hours, whether it's something that their team can look at. And if the answer is yes, they send across some high-level indicative loan terms, which will have the sort of the LVR metrics, the indicative pricing, how much of the interest is capitalized, how much of it is going to be paid month on month. And that's a good document to present to the borrower and gives the borrower comfort that there's actually something of substance that may be there. And if they're interested in that, then the borrower will complete a more comprehensive application form that's prepared by Assetline, give their sort of identification details, some information around the assets and liabilities and income, and that information, if they've, that's more of a 30-minute process, I would say, for the borrower to complete. And once they provide that information, they send it across to the Assetline team, and if they're happy with that, then they produce an indicative letter of offer. Post-indicative letter of offer, there'll be some application charges to pay for the valuation report and cost to process the loan with them. We find those costs to be, compared to the market, quite minimal. And once the borrower pays for those charges, the valuer goes out, inspects the site, prepares a report. Again, that process is quite quick from experience. It doesn't take more than a few days. And once the valuation comes in, and assuming it's in line with what was noted as the indicative valuation of the property by the borrower up front, Assetline proceed to settlement of the loan within 24 to 48 hours.
In our experience, we find them to be extremely responsive and professional. They're often and also in particularly honest with their assessment of every loan scenario, which, in many instances is warranted, because I think most borrowers want a faster response rather than a delayed response. So if they can be of assistance, they'll tell us quite quickly. If they can't be of assistance, they'll tell us quite quickly as well, so that it allows us to then explore alternative options for the borrower. We have settled a number of transactions with them previously, so it also gives us comfort that they can deliver on what they say they can, and provides essentially funding certainty and speed of execution for our clients, which is paramount for them.
What we found with Assetline is they have been very upfront with what they are willing to do. They don't change their terms as the deal progresses towards completion, and they have delivered on what they said they would do, which is a very, very important quality in this private lending market.
The client, currently is very happy with the situation. Obviously questioned initially, the point of a high cost of finance solution, but ultimately the fact that there was a speedy settlement was warranted. She looks back on the experience positively, and the loan will be repaid out of the sale of the property as promised.